Welcome to the December 2025 real estate market update for Las Vegas. What happened last month in real estate here in the Las Vegas Valley? Well, let's go ahead and dive in and find out. I am Justin Miller, co-founder and principal at the Chong Miller Group. And at the Chong Miller Group, we help people buy and sell homes. We help people build wealth through real estate. And this is the December 2025 video, which means that the insights and the data are coming from November of 2025. And I record the videos, or rather I pull the data for the videos on the 7th of each month, so the data is most stable. So first thing, that macro environment, fear and uncertainty. You'll remember the federal government was shut down for all of October of 2025, and that had a very significant impact on what we were looking at for data that came out of the month of October. Significantly cutting into sales volume, significantly cutting into listing volume. And so do we see that continue in November? Yeah, and we'll look at the data, but yes, absolutely. The federal government did not open until after the middle of November. So we continued with actually the longest government shutdown in the history of the US. That absolutely impacted November. And by the way, it compounded seasonal issues that we usually get at this time of year. And so we're going to see that continue through December, even though the government is now open. All right, consumer sentiment continued to look weak in November, as did business sentiment. In fact, as I record this, the small business sentiment numbers just came out, and they're looking really pretty weak, right? The top line number was there is a very slight increase in overall small business sentiment. But if you look at the actual embedded data within that, plans for hiring, cost issues, structural confidence about the economy, all actually very weak numbers, making investment by small businesses challenging, just as we've seen challenging for large businesses and for individual consumers. So we continue to be in a fairly high interest rate environment with some fluctuation, the fluctuation not being productive. It's not fluctuating down, it's fluctuating within a band. If you happen to be in a transaction and you can lock rates at 6.1%, do it. Don't wait, because they're probably not going to break below that, at least for the immediately foreseeable future. And again, the market forecast video for 2026 will be coming later this month in December. All right, so with that, let's go ahead and move into the numbers. Before I do, please, if you like these videos, subscribe, smash the like button, hit the notification bell, and please share these videos with your friends, your family, your neighbors, your colleagues. The insights provided here are very high quality. They're backed by data as well as a lot of educated knowledge, and they can be really helpful to you or the people you know in proceeding into and through the real estate market. All right, December update numbers from November. What happened with regard to price? Well, a lot of people will be surprised, and I actually said this in the October video, that we're getting into a lower transaction volume part of the year, where individual transactions take on more significance, and so we could actually see prices go higher instead of lower in November. Same thing will be true for December. Why does this happen? Well, in a general year, we see the number of transactions going down in December, and consequently, we're seeing demand and supply decreasing at the end of the year, and that means that you're probably seeing people who have more negotiating power negotiate for a little bit lower transaction prices in the last couple months of the year. Well, what happened in November, though, was aberrant to that. We actually saw prices go up across the entire housing complex here in Las Vegas. Remember, this is only for resales, not for new construction. Single family resale price went up by $15,000 from $460 to $475. That's up by 3.3%. From the month of October of 2025, it's up 1.1% year over year. Okay, so our year over year growth is a little bit weak, but it's positive, right? And that's different than what we had seen actually in the past 2 months, where we had seen year over year price growth negative. So this is good, but it's interesting. That's a pretty big bump in a single month, up $15,000 or 3.3%, right? Annualized 3.3%. That would be 40% price appreciation throughout an entire year, right? 2025 has not been a strong year like that in terms of transaction volume or in terms of pricing. But it's interesting because November was actually very strong for pricing. For single-family homes, also strong for condos and townhomes. So condos, what happened? Prices up $6,000 or 2.7% to a median sold price for condos, $231,000. Okay, pretty healthy gain there, 2.7%. That'd be 32% price appreciation over the course of the year. If we saw that all year, we have not, that's not what I'm predicting, and certainly not what's happened in 2025. But again, November pricing for condos, actually quite strong, up $6,000. Now, we are down on condo pricing 5.7% year over year. That's weak, right? We'll see what happens with the month of December, but that's actually weak. That's about what we would see in a normal year for gain in this market. So we've given back effectively a whole year's worth of gain that we would normally see in the condo market, right? So instead of being flat for 2025, equal to 2024, we're looking at numbers that, assuming that all the numbers worked in kind of an average sense, we'd be back to 2023 pricing levels on condos. This is not exact. I'm not making that exact comparison. I'm just giving you kind of temporally an estimate on that. Townhomes. What about townhomes? Up a very strong $8,000 or 2.4%. That's like 29% annual price appreciation if we annualize that. Again, that's not what's happening, but again, points to November was a really strong month for pricing. So median sold price for townhomes, $338,000, and that is down a more moderate, but still down 3.9%. Year over year, right? And you can't multiply that by 12 to get the annualized version for that. That is the actual year over year comparison. So townhomes came down through the end of November, 3.9%, and condos came down 5.7%, whereas single family homes, clearly the best performing sector, submarket in Las Vegas resales, up 1.1%. Year over year. Now, something that's a little bit surprising to me, actually, in looking at this price growth and in going through multiple transactions in the month of November for my clients, as well as looking around the environments that I come across every day in the Las Vegas Valley for pricing, I had actually expected that we were going to be seeing some bifurcation in the market where the upper end of the market was actually doing better, and that was what was pulling up the median sold price. But the subsequent numbers I'm going to give you, including this next non-numeric but qualitative insight, suggests that that's not actually what the case was. The market actually performed pretty consistently across all subsectors. So higher end, lower end, middle of the market, etc. Price per foot actually remained flat across single family resales, across townhome resales, across condo resales, suggesting that actually it was not the upper end of the market pulling those median sold prices higher. The whole market was actually behaving approximately similarly. When I say the whole market, I mean across the pricing strata. And we know all three submarkets, condos, townhomes, as well as single family homes, all responded pretty similarly. So that's actually really interesting, and we're gonna look at a little bit more about that as we go through the rest of the data. But pricing strong month over month, really strong month over month, and looking better year over year than what we've been seeing over the past couple of months, just because of the movement of the numbers across years. All right. So the next piece of data is the sold numbers. Remember, this is our proxy for demand, because you don't get a sold if you don't get a buyer making an offer, and of course a seller agreeing to that offer and then getting all the way through the contract, right? So we have another proxy for supply, which we'll get to in a minute, which is the inventory in the marketplace. The only real measure we can go for with demand, legitimate demand, right? Not like looky-loo buyers out there or people just kicking the tires, but legitimate demand, meaning buyers who are actually willing to commit, is the sold transaction volume. So what happened with that? Well, where prices went up, sold transactions went down. And I've been telling you that it kind of did not matter what was going on otherwise through the environment as we looked at the October numbers. November and December, seasonally really weak, probably sufficiently weak in the housing market generally, right, year over year, that we were going to be seeing volume decreases throughout the remainder of the year. And we still had that fear and uncertainty overhead sitting out there for over half of the month of November of the government, the federal government being shut down, right? So what actually happened? Well, let's look. Number of closed transactions. That's a sale where buyer came in, seller said yes, buyer and seller work through the entire transaction, get to the finish line, and the transaction is recorded as sold or closed. 1,375 single-family residential resales closed in the month of November. Okay, so that's down 186 or 11.9% month over month. So October was bad, right? There's no question in terms of volume. All this year has been bad, right? October was bad, predicated primarily on the economy, the government being shut down. Remember, interest rates in October, pretty much where they were last October, right? 2024, 2025, interest rates just about the same. Median sold price in October 2025, 2024, just about the same, right? So weakness in the market in October was not because of high interest rates, and it was not because of high prices. It was because of other things, primarily fear and uncertainty associated with the government being shut down and tariffs and other things like that, right? So in November, interest rates about flat, very slightly lower than they had been in October. Median sold price went up, right? But we started the month with median sold price that had been, right, the October numbers, not all that high. Prices and interest rates are not explaining what's going on in the market right now. What's driving the market at the moment, seasonality, as well as residual fear and uncertainty associated with government shutdowns, with tariffs, with potentially, almost definitely, very significantly increasing insurance rates for health insurance, definitely already being seen for property insurance and car insurance in the Las Vegas Valley, as well as across most of the rest of the country, as well as some dislocation in the employment market associated with crackdowns on immigration into the U.S., and that's eliminating student visas. It's reducing asylum admissions. It's reducing a lot of people coming into the country, as well as these very violent public clampdowns on finding people who have been here maybe for their entire lives without legal status and throwing them out of the country. All of those things are creating uncertainty, and that's driving down transaction volume. Okay, so transaction volume down 186 or 11.9% month over month. It's down 3.7% year over year. And by the way, remember, year over year, that's looking back to November of 2024. November of 2024, December of 2024, locked in 2024 as being the second lowest transaction volume that we've seen in the Las Vegas Valley in a generation. Only 2023 had been weaker, right? We're running way below 2024 levels, down 3.7%. We're running below 2023 levels. Condos, 160, that's down 72. Big drop, down 31%. Month over month, down 30.0% year over year. Huge drop in transaction volumes, right? That year over year number is not because of seasonality. That year over year number, right? The same season took place in November of 2024 and in November of 2025. That's the reason we look at year over year numbers actually is because we're trying to control for seasonality, because we know November is going to be weaker due to seasonal factors in a typical year than October. But there's no good reason to think seasonality issues vary across the year, that November should be 30% weaker in 2025 than in 2024. This is a really weak number. Low number of transactions that took place in November of 2025, down 30.0% year over year for condos. What about townhomes? 151 down 42 or 21.8% month over month. And from October to November, that's a big drop, by the way. Single family, we're down 11.9%. That's even for single family a big drop due to seasonal factors, right? It's closer to inline, but down 21.8% month over month from October to November. That's a steep drop for townhomes, right? That's the kind of drop off we see in December, the weakest month of the year every year, right? If we look at a chart, we see the big dip. It starts in November, but it's a dramatic drop that takes place in December. We're seeing that dramatic drop in November, which suggests something worse coming for December, by the way. We are down 6.2% year over year, November 2024 to November 2025 in townhomes. Very low transaction volume. And by the way, yes, that does mean 2025 is running below 2023. And in fact, there's no way for 2025 to now catch up to 2023, let alone 2024. 2025 in Las Vegas Valley is going to have the smallest number of transactions in a generation. That's the state of the market. The actual qualified express demand existing in the market right now. That's not because no one's moving to Las Vegas. It's not because of interest rates. It's not because of housing prices. It's because people are feeling locked into and or locked out of decisions about the marketplace. Okay, 2 insights. Sold. Pending transactions down across all submarkets. Not a big surprise. We expect December to be the weakest month of the year, and so pending contracts would be ones that had come into existence and would close in December. We expect that to go down at this time of year because we expect December to be weaker than November, just as a pure seasonal issue. It's going to be weaker. It's going to be considerably weaker. The other sold highlight, the numbers are running below 2023, as I just alluded to. 2025 is going to be the weakest in a generation. Okay, let's move on then to the supply side, right? That was the demand side of the market. The supply side of the market, what's going on? We look at inventory, okay? So inventory, it's all down, right? Now we expect to see drops in November due to seasonal factors. We expect those drops to continue into December and rebound in January, right? But we've seen drops here that are a little bit bigger than we might expect from normal seasonal patterns. Not a lot, but a little bit. Well, so single family, 7,076 down 713. That's pretty big. That's down 9.2%. That's more than the seasonal pattern would suggest that we should see in November. Okay. That's a pretty steep drop in inventory. Condos and townhome inventory held up a little bit better. Condos 1543 down 48 or down 3.0% month over month. That's a pretty typical seasonal drop from October to November. Townhomes 1,143 down 44 or down 3.7%. Okay. Again, in line with what we think that the seasonal pattern should give us for the month of November. So single family down more substantially, but condos and townhomes in line with what we would think, right? Down, in line with expectations. Now, the numbers are down here on the ticker. So you can look now at the annual, and let's look at what that is. Year over year, single family inventory. These are listed for sale, sitting in the multiple listing service, up 7.9% year over year. Okay. Now remember, last year we had really weak inventory, and all of this year we've been hearing all these people talk about the inventory flooding the market and blah blah blah, and everything's going to collapse because inventory is flooding the market. And by the way, when they talk inventory is flooding the market and things will collapse, they're talking not about sales volume collapsing, they're talking about pricing. Well, pricing hasn't collapsed. Pricing is actually $5,000 under the highest price we've ever had on single family resale in Las Vegas Valley, $475,000. Down from 480 at the peak that we've fluctuated up against a couple of times, right? We've never exceeded that. You read, you listen to whatever, you hear. Some people say, oh, we've been to 485. We've not. That includes the corrupted data, the unclean data of new construction. That does not qualify as a resale. That is inappropriate in the data set. And it's not indicative of anything because it's actually corrupt data. Okay? So 480 is the most we've ever been at, and we're at 475. Prices haven't been falling. Right? They've not been falling, right? But what has been falling? Transaction volume. Right? So if we had tons of inventory, transaction volume would actually be going up because we could have more things available for people to actually look at. Well, we're going to look at inventory a little more in depth here, but let me go through the rest of these annual comparisons and make a note for you that's really important. Condos. Condo inventory, we are up 9.9% year over year. Okay, sounds pretty substantial. Townhome inventory, we're up 44.7% year over year. That's definitely a very big gain. But in all three submarkets, we've actually seen the gap between inventory in 2024 and 2025 narrowing every month for 8 months now. That's a durable trend, right? That's not a one-off. It didn't just happen. It's 8 months in a row. We've actually seen the delta, the difference between standing inventory this year and last year declining, right? Growth in inventory, that's not happening right now. Inventory is actually falling. And the gap between last year and this year is decreasing, right? It's still positive. We have more inventory than last year. That's good. But it's decreasing. It's decreasing pretty substantially. Okay, now, the other insight, new listings plummeted in all three submarkets. Now, we expect new listings to go down seasonally in November and again in December, right? Because people don't want to put their houses into the market if they had not already committed to doing so. So standing inventory Should go down a little bit at this time of year, but not a lot. New listings will go down a little more substantially at this time of year every year due to normal seasonal patterns. Well, new listings fell off the cliff, right? They didn't just go down a little bit. They went down really substantially. We saw new listing numbers declining at far more than the normal seasonal pattern rate. Okay, so that's inventory. Now, I have not for the past couple of months, but I did earlier in the year a number of times give you a breakdown on the inventory because, and I want to do that this month, right? We ended November with 7,076 single-family houses sitting in inventory. So the median list price should be something very close to $475. This is not advice for how you should price your house, right, at all. We can look at all of the inventory that's sitting out there waiting to be sold. So to do this, I look only at single-family homes. Resale, single-family homes. I cannot look at those homes that are new construction because they'll skew the information, the data, they're dirty. I cannot look at condos or townhomes. I could do those separately, but I cannot put them into the single-family home distribution, right? So I've cleaned the data as much as possible, and here's what it is. The median list price for these 7,076 homes that are sitting out there, single family resale, sitting in inventory in the Las Vegas Valley at the end of November, was not $475,000. It was $549,992. Okay? That seems really precise, but it's approximately $75,000 too high, right? You take the median sold price, $475,000, you add $75,000 to it, you're at $550,000. That's basically what we're looking at, is the median sitting in inventory. Well, I don't know about most of you who are watching this video, but most of the people who buy houses in Las Vegas, they can't come up with an extra $75,000 to fit into their budget, right? They're coming up with a budgetary number and they're thinking, maybe I could go up a little, I prefer to go down a little. I'm going to be looking at things within some range. And if I'm looking at a single family home, $475,000, maybe I'm looking at things that are $450,000 to $500,000. Maybe I'm feeling like there's a little more negotiating ability in the market right now. Maybe there is, maybe there's not. So I'm going to up my search criteria. I'm going to look from 480 to maybe 510, right? Hoping I can get that 510, maybe a super nice house, and I can get it down to maybe like 490. That's a big drop, right? Big drop, but maybe it's possible. Maybe if there's a lot of buyer negotiating power. Don't know that's what's going on in the market right now, but buyer might reasonably think that. So they put a gating factor on their search when they're looking at homes.com or on Zillow or whatever. They're talking to their agent and they say, yeah, I'm looking for something like a median home. I'd like to stay, like a little better than, so maybe like 480 to 510. The agent says, oh, no problem. Let me do some searching for you. And maybe the agent hopes you'll spend more. And so they look at 520 down to, they don't want to show you something that's too cheap because it's wasting your time. It's probably not going to match anyhow, but it also maybe doesn't align with their particular interests. So they'll go down to the 480. Maybe they'll go down to only 490. So they're looking 520 to 490. Okay. But the median list price is 550. It's 549,992. It's 550. They're not finding the median home, right? They're not finding the median home, and you're looking for something slightly better than the median home. You want to buy a home that's just a little more than the 475. You'd like to buy a home that's maybe 480, 485, maybe 490. And they're not even finding the median home, right? And you're not finding the median home. The standing inventory is priced very poorly. Now, this could be because sellers are like, I don't want to sell my home unless I can get this much for it. Okay, no problem. You won't sell your home. So just know that. There is no reason for you to be out there with the occasional person traipsing through, because you're not going to sell your home if you're priced $75,000 too high. Yeah, if you've got a $30 million home and you're priced at $30,075,000, yeah, okay, that's insignificant, right? But at the median, that's a big number, right? That's a big number. So if that's the number, you're priced $75,000 too high, you're not within view of a buyer. You're not even within view of a buyer's agent. So, by the way, as I was doing this, it appears that in the month of November, there were only 3 houses in the entire Las Vegas Valley that were priced in the 200,000s. So if you want to buy a single family home below $300,000 in Las Vegas Valley, yeah, you've got 3 opportunities to do so if you look at the inventory that existed in November. Okay, and those are maybe not places that you'd particularly want to live, right? Maybe, but maybe not. Maybe you pick them up and you rehab them substantially. So anyhow, the insight then is inventory is priced too high on average, right? At the median, priced $75,000 too high. If we normalize that 7,076 single-family residences resale sitting in inventory at the end of November of 2025, that number drops, right? Because they're not all priced properly. We have to renormalize this. Well, there's only 4,250 houses that are sitting in inventory under this renormalized condition, right? Where we say, okay, there's 4,275 sitting in inventory that are appropriately priced. And that means 2,700 are out of their minds, right? What that translates to is, right, kind of an easier to understand number. Only 60% of currently existing inventory is real. So we talk about these larger numbers, 7,076, and we note, hey, that's now only 7.9% elevated year over year. But actually, that's not the right number that we should be looking at. It's harder to capture this number, but the real number we should be looking at is 4,250. And that means we're running at this time of year, we're running at about 48% of normal inventory. 48% of normal inventory for this time of year. Do we have large inventory? No. We have a lot of fake inventory, right? If 60% is real, 40% of that inventory that's sitting out there is fake inventory. It's just stuff, right? It's just stuff. It doesn't mean anything. And it gets captured in these macro analyses by people who have absolutely no clue what they're looking at, and they just spout out this stupid information to you because they don't understand what this actually is. 40% of the standing inventory in the Las Vegas Valley for resale homes, single family, is fake at the end of November. 60% is real. And if you're a real buyer, you're only looking at that 60%. And when you start thinking about neighborhoods, you start thinking about size of house, you start thinking about the finishes that you'd like, the school or work facility that it's going to be close by to allow for a reasonable commute for you, or whatever, right? Your number of houses that you're looking at gets smaller and smaller and smaller because you're segmenting the overall marketplace from 4,250 down to what's available in your particular area that you want to be in. Inventory is not high. Inventory is low. And inventory has continued to be low since 2020, since the economy was closed down because of the COVID pandemic. we're still sitting in a very low inventory environment. And by the way, low inventory reduces numbers of transactions because buyers, even if they want to buy, they're not finding the stuff they want. And low inventory causes those buyers who are looking to recognize they may have to pay a little bit more than they wanted to. It causes prices to go higher. That's why even with low sales transactions, we're seeing prices go higher. It's not because the top of the market is doing better than the bottom of the market. It's not because of lower interest rates. It's because the inventory that's sitting out there, the actual actionable inventory, the purchasable inventory is really low. And real buyers are discovering their choices are pretty limited. And when they find what they want, that bargaining power they thought they may have been having, they did that search, remember, 480 to 510. Their agent did the search 490 to 520. They wanted to be in a house that was close to the median. They're finding they may not have a lot of bargaining power. And so they maybe picked that house that was at 500 as being the best overall compromise and hope to get it down to 490, 492 for a purchase price, right? There's a little bit of buyer bargaining power, maybe especially at this particular time of year, but not much. There's just not much because we actually are structurally limited for inventory. That's been the true story all year long, irrespective of all the people who've been out there hyping the, oh my gosh, we've got so much inventory and prices are going to collapse. Total BS. Totally wrong analysis. Totally misleading to you. And if any of you have bought into that, or know people who have bought into that, they have been harmed this year by that garbage that's sitting out there. If you or anyone you know is actually thinking about being in the real estate market, put them in touch with me. Just refer the video to them so they know what the actual information is, so they're not going to be harmed in this marketplace. Okay, one other piece of data, and then that's it for this market update, and that is the back on market numbers. November, not quite as bad as October's back on market numbers as the government closed and a lot of people got very concerned and decided to back out of transactions, but still really concerning, still elevated. And remember, we've been really elevated on back on market since 2020, and that has been true now for 6 years. Very high back on market numbers, between 25 and 33%. Well, single family, 545 failed contracts that went back into the market. That's 28.4% of all of those contracts failed, right? And when you remember, back on market is actually only that group that failed that then relisted. Something that failed that did not relist into the market, into the MLS, is not a back on market, which means my counts on failures are actually undercounts. It's an unquantifiable undercount, right? It might be 5 more units, it might be 500 more. It's not 500 more. We'd find that sitting in data in shadows, echoes of something else. But it means that the 28.4%, 28.4% of back on market, that's an undercount for failures for single family. Well, what is it for condos? 88, that's 35.5%, more than a third of all the condo contracts failed and went back on market. Bigger number failed because, again, we're undercounting. And 30.0%, 67 townhome contracts failed and went back on the market in November. Very elevated numbers. Make sure your agent's able to explain, not using jargon, right? Actually explain to you what's going on with this. Because can you imagine, well, if you're out there trying to transact and you're not working with me, not only can you imagine you're experiencing it, one in three buyers who are trying to buy a home, who are legitimately trying to buy a home, the contract collapses. 1 in 3 sellers who gets a contract collapses. This is horrible, horrible. A structural problem is starting to really materialize in this market because this starts to become kind of expected. A lot of contracts fail. No, there's always some contracts that fail, right? It's unavoidable in some circumstances, but these numbers are just there. If it wasn't so serious, it'd be ridiculous. It'd be like a bad joke. Really horrible things taking place in the real estate market. And part of it, by the way, it's because of such cruddy information that's being propagated by all of these different people out there about what the state of the market is. Great. It's just, these are compounding issues. Okay, so anyhow, again, I am Justin Miller with the Chong Miller Group. At the Chong Miller Group, we help people actually buy and sell homes. We help people actually build wealth through real estate. And if you like this video, again, subscribe, smash the like button, hit the notification bell. But please share these videos. They're really helpful information to people who are willing to take the time to understand what's going on in the market, where I've condensed that for them. So you've got, in a relatively short period of time, a lot of important educational content. Okay, I will see you in the next video. And again, later this month, we will be having the 2026 market forecast video. It's going to be a complicated video because there's a lot of things coming up in 2026 that are going to impact the real estate market, where there's less visibility on some of those issues than we would normally have in a normal year. So anyhow, I'll see you in that video. Thanks. Bye.